In fact, moving on to our next story, which is about China's stimulus. At the outset, let's try to understand why a heavily export-oriented economy like China has certain limitations. First, there's the dependency on global markets. So the issue of trade imbalances could lead to tensions with trading partners and potential retaliatory measures. That's happening already between China and many countries, including the US. But, overproduction also has environmental costs. But apart from that, what do you do with all the excess production that China produces? So is dumping the solution? Now then, there are also possibly poor working conditions, low wages, labor disputes that could arise. Also a complete neglect of the domestic market. That's not all, because the economy will become exchange rate hypersensitive or oversensitive to supply disruptions as well as exchange rate fluctuations.
I've been arguing that China is at the fork on the road. If they continue with their current model, which is export-led growth, there will be trouble. Why? Because the Chinese economy has grown to a point when China's export is no more a minor factor in global trade.
Well, in late September 2024, the Chinese authorities, they announced measures to stimulate the economic activity there, to support the property market and to boost consumer confidence. There was a monetary stimulus of about 1 trillion yuan, that's approximately $141.82 billion. There were interest rate cuts that came down from 1.7% to 1.5%. This is to guide the prime lending rate. And also mortgage rate cuts by around 0.5 percentage points. And that is to benefit approximately 50 million households. Special bonds also worth about 2 trillion yuan, or about $284.43 billion. And this was specifically for local governments to tackle their debt problems and also to subsidize goods so that they can boost demands for homes, for household goods, so that people, can improve the standard of living in homes, and then over time that would increase the demand for homes. However, now the IMF believes that these measures are insufficient in themselves to lift China's growth in a material way.
And that's weaker second quarter of the year is reflecting continued decline in confidence in the household and corporate sector, and also the continued problems in the property sector in China.
Well, Mr. Srirangam and Dr. Kapoor are still with us. Dr. Kapoor, is China's stimulus going to boost the domestic demand in that country?
I think not really, because what China has done is fairly too little at this point in time. Like, yes, they have a close to about $140–150 billion stimulus that has gone, but that is not really going to drive a lot of things, because the larger problem in China is going to be how do they raise or continue to raise the per capita incomes across for their population. Right now, their per capita income is close to about $12,500 USD. Now the larger question is going to be that will their consumption-led economic system, can it actually continue to fire on all cylinders? Now, what we are seeing in China is possibly a middle-income trap that they're really getting into. And to really get out of that, the question is going to be that how do they improve their levels of productivity further? Because when you talk about the issue of China in terms of like the export-led model, what has happened is they have clearly neglected certain parts or certain regions of China. Because if you really look at China and if you just break it into half versus left and the right, you would see that 94% of the population lives on the right, but most of the economic benefit is happening from the extreme right of China in terms of like the towns or the provinces on the port area or near the sea. So the economic benefits have not trickled down to the other regions in China. So the question here is going to be that how the stimulus is going to help create growth in the other set of provinces in China, not just Shenzhen or Shanghai or Beijing. It has to really go beyond that. And when you talk about the stimulus is going to just help some bits within the property market, which is already oversupplied. And how do we really create that stimulus per se? Because there are groups like Evergrande, which, if I get my numbers right, they're close to about $300 billion in debt.
Yes.
So their enterprises are also severely under debt right now. And if that system collapses, or if evergrande collapses, you're talking about a collapse of a nature which is going to be very similar to the 2008 crisis that US did see. And it trickled down to the world. I don't suspect that China's issue is going to trickle down in the world, but there would be a certain level of shrillness that will happen. So there would be a certain kind of hiccups across the world. But yes, this is not really going to help much. They have to do far better, far deeper in terms of uptaking their consumption cycle once again.
Mr. Srirangam, you know, how do the market forces operate in China? Would you say that there's too much state control and that is probably a problem?
China is not a market economy by WTO definition. It has a lot of opaqueness. There is too much of subsidy. Nothing is known about who gets what, how, when, and all that. That's one big problem. Another problem is, yes, the ideological stranglehold on the economy is telling in terms of falling private sector investment. Jack Ma is hiding in Japan. So the ideology, the Communist Party, control, private sector, not investing, this is one side of the story. The other side is, lack of transparency, as we were talking about. That leaves the Chinese economy, a lot of people suspect it. After all, why is there a backlash against Chinese exports, the so-called overcapacity, etc.? Consumption, yes, is there. Deceleration of the economy is also there. But there is also this problem of Chinese subsidization and dumping. That is why the world is not liking Chinese goods anymore. So yes, China by any standards is not a market economy.
Indeed. Dr. Kapoor, coming back to that issue on the real estate front, according to media reports, China has around 60 million unsold apartments. And it's going to take like several years for these to be sold. How long do you think it's going to build buyers' confidence, in fact, to return? They probably are not willing to buy at the current time.
Well, so I think, one, I disagree with your statement when you say it is going to take a couple of years to get sold. It is going to take a decade or so to get sold. So that's where it is going to be. It's not happening anytime soon. But if you really look at this whole thing in terms of mortgage rates that are happening in China, there is a certain small short-term correction that we might see, but the oversupply of unsold homes and the financial instability of the developers, as we are seeing, is going to have a very telling role. There is also another thing that we are not talking about, and that is the demographic challenge that China has as of now. Its aging population, slower rates of urbanization, activity not really going to various other locations beyond the certain set of port regions. So there might be some prevention in the short run, but they will have to really set things right for the long term, wherein they are able to spread the growth. In fact, they're essentially trying to apply old solution to the new problems that they're facing, because their one-child policy has come to bite over a period of time, which hardly very few people talk about, but it is going to be one of their biggest challenges, because when you really talk about China accepting a slower but more sustainable growth while implementing deeper reforms is going to be a story to see. But I hope they do that, because sustainability, solid, creating resilience is going to be the key for that.
Final word from you, Mr. Srirangam. China has been using checkbook diplomacy, has a lot of surplus funds, their Belt and Road Initiative. All this going to take a bit of a beating because of what's happening there?
Yes, there is already, as we talked about in the backlash, the BRI is not working. There is protest in Pakistan. You have seen Maldives trying to rebalance. Initially, they went one way for China. Sri Lanka is rebalancing, and Africa is also up against China. So this geoeconomics of BRI and trying to export it to them because they can't export anywhere else, that's not going to work. And so, yes, China, it's a new China now. They can't be any more overconfident. The present is ours, the future is ours, our politics, our economics. No, that era is gone. China has to reinvent itself to be friendly. The geopolitics of West Asia means a lot of loss for China. And the Ukraine war also could mean quite a bit of a shock for China. And so it's not going to be easy for China for the first time now.
We leave it there. Thank you very much, Mr. Srirangam, for joining us here in the studio, and Dr. Amit Kapoor for your inputs. Thanks both of you for enlightening us on this subject.